Let's get right to our next guest. Tony Zabiegala, Chief Operations Officer, Senior Wealth Advisors, Strategic Wealth Partners. Thank you so much for being with us. So we had a couple of days of gains and people loved that. In fact, we erased some of last week's losses. The Dow's trying to go, let's see if it can go for a third day of gains. But what do you think? Where's that big Santa Claus rally we're waiting for?
Yeah, December's known for the Santa Claus rally. And what that means historically is that the market rallies 2%. Well, guess what? We got that yesterday. So, if we end the year flat, we have, performed historically, right? So, but ultimately, I really feel that this market's trying to find a direction because on the surface,
wait a second. I want us to, before you get into the big, that's it? That was it? I mean, I guess you're looking historically at what the Santa Claus rally is. You're saying 2%, but I don't know that felt like it. That's amazing.
It came in one day. What are you going to do? Like normal, the market has been acting very rationally for all year. Like one headline comes out about a COVID variant and we go down 4 or 5%. So to get it all back because it wasn't, as serious as other people thought, to get that 2% back in one day makes sense based on the highs and lows that we have seen and how large the market has grown this year. We're up over 26%. To give back 3 or 4% should not be, it's sizable for as much as we've grown this year.
Okay, so that being said, how do you play it? I know you have some picks for us, but what's the premise of trying to make some good investments? What would be some parameters that you're looking for?
I really feel that the parameters, the keys to this is, all right, so I mentioned that the S&P 500 is up 26%. But if we take a look at like the style box, the small cap growth has grossly underperformed this year. They're only up around 10%. So this market has been supported by the likes of Apple, Microsoft, Amazon, Google, Meta, Tesla. So I feel that the investors need to be involved because of Tina. There is no alternative. And the key here is you have to have your core positions, but the size of your mid-cap and small-cap exposure needs to be appropriately adjusted based on your risk tolerance.
I am curious about how, when you talk about small caps, there's a lot of people who have an interest in small caps. What kind of risk tolerance do you need to be in that group? Because when you look at it, it can be the biggest swinger. For example, when I was looking at 1 month, right? 1 month, the Dow is down 2%, the S&P is down 0.5%. The Russell is down 7%. However, when you look at the week, the best performer, the Russell. So there really can be some big moves. What do you tell people about small caps?
You better have some thick skin. You better be ready for volatility, and you need to size it appropriately. You need to figure out, can I stomach a 3 or 4% movement in my portfolio in a day? If you can, then you can have more small cap exposure. But a lot of air has been let out of these stocks because of the fear of, the Fed tapering and the Fed increasing interest rates. Last week, it was kind of muted, but they have a very hawkish tone going into next year. So having small cap exposure when they're tapering and raising interest rates, it's going to be volatile. You're going to have huge swings where you're down, small caps could be down 4% in a day and up 5% the next day. So thick skin and know what you're investing in. Make sure that the valuation is ideal for your risk tolerance.
Okay. So let's get to some of the names that you like. Silicon Motion, SIMO. Tell me about that one.
Yeah, so SIMO, when I've been on the show in July, the stock was $64 and I talked about it. I talked about it in August when it was $78, and I'm going to talk about it again today when it's $90. So we've seen about 40% growth since July, right? I've liked it for several months, and I continue to like it because I feel that it's an undervalued semiconductor when you compare it to its peers like AMD. The PE ratio for AMD is 44, where SIMO's coming in at 21. And because of this undervalue, they're a great buyout target. They also came out this week and announced that they're doing a share buyback program over the next 6 months of around $200 million. And they have nearly $1.7 billion in backlog business that the market is pricing in around about 1.05 billion next year. If they exceed that, the stock's going to, have great stuff to report when it comes through earnings. If they even, in the same amount of time, since I would say the last 6 months, AMD's up around 80%. SIMO's up around 40%. So if SIMO has the potential to catch up to AMD, I think it's a great buy still, even though that we're at all-time highs in the stock.
Absolutely. All right. That's so great. And then a quick thought on TJ Maxx?
Yeah, so TJ Maxx, and I'll even group in Burlington, Burlington Stores. I feel that the discount retail stores have a great secular story now that inflation is on the rise. And here's a few reasons. I feel that these two types of companies have a great growth location footprint. They can continue to grow. You're going to get that pre and post holiday pop, and ultimately, shoppers really like to treasure hunt, and everyone loves to go out and find a good deal, especially on that name brand clothes that you're trying to find. Again, both are kind of at all-time highs right now, but I think that's okay because as inflation increases, it's going to tighten the wallet of the discretionary spender. And when they're looking for buying name brand clothes, they're not going to go to Nordstrom's. They're going to go look for TJ Maxx and Burlington and see if they can find those same clothes on a discount rack.
All right. Thank you for that. Right. And we'll continue to watch your other one, SIMO, which has been a winner since the spring as you've brought it to us. Thank you so much. Tony Zabiegala, always great to have you on the show. Thank you very, very much. Good to see you. Chief Operations Officer at Strategic Wealth Partners.